Hi everyone, a very good morning, good afternoon, and good evening to all of my viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be considering one interesting indicator. This is a well-known Japanese indicator and quite old at that. The name is Ichimoku. From a name, you won't get much of an idea as it's a Japanese name unless you are well familiar with Japanese language. The name is not going to give you the idea of how this indicator works. But for that, this session is dedicated to look at the possible ways to know its properties and various ways in which we can take advantage of this indicator to look for opportunities in the financial market. So let us now head to the JForex 4 platform, which has been developed by the Dukascopy Bank SA. There is a newly released JForex 4. Here you can simply do a quick search, or you can go to add indicator option also, and there you will find these listed amongst the overlap studies. And if you don't want to do that much work, all you have to type in its name Ichimoku, and here it is. All right. And this is a fancy looking indicator. We get these multiple lines, and we have the cloud formation also you formed using these two lines, the green one and the red one. Green one, as expected, is indicative of the bullish tendency in the underlying instrument, and the red cloud is indicative of the bearish sentiments prevailing in the underlying instrument. This is the Euro USD chart drawn on the hourly candle period. The setup is of the default with Tenkan-sen being of 9 candle period formation. The Kijun Sen is of 26 candle period formation. The Senko A is simply the average of the first two lines, the Tenkan Sen and the Kijun Sen. And Senko B is drawn using the calculation period of 52. So all these lines are used in various ways, and is quite easy to understand. These lines are drawn simply using the average price. The high and the low for the 9 candle periods is used to come at or to arrive at these Tenkan-sen value. So we take the average of the last 9 candle periods, and we do the same thing for the Kijun-sen, where we take the average of the last 26 candle periods. And for Senko A, the two lines, the Tenkan-sen and Kijun-sen output lines are added, and then we divide it by 2. So we take the average of the Tenkan-sen and Kijun-sen to arrive at Senko A. And Senko B is the average price for last 52 candle periods. So that's how this works. And coming to the cloud, we have these Senko A and Senko B lines. Using these two lines, we get this cloud formation. If we see that Senko A line is below Senko B line, then that is considered bearish, and we get this drawn cloud drawn in the red color. And if we have the Senko A line above Senko B, then we have this cloud drawn using the green color formation. So this is indicative of the bullishness. So this indicator can be used multiple ways. We can use it for figuring out the momentum as well as the support and resistance area. So as long as the price movement is below this cloud zone, then that is considered bearish, and if the price momentum is above this cloud, then that is considered bullish. And we can utilize the upper line of this cloud as a support area when we have bullish tendency for the underlying instrument. And if the underlying momentum is bearish, then we can use this lower line of the cloud for considering the bearish trade. We can use it as the resistance while keeping the stop loss above the upper line of the cloud. And for buy trades, we can keep the stop loss below the lower line of this cloud. So that way we can use it, or you can simply utilize this crossover formation of the first two lines, the Tenkan-sen and Kijun-sen. So these are going to be the leading lines. We will have much of the price moves in these two lines, and this will be quite reacting quite fastly to the price moves, as these lines are drawn using the lower candle break formation. So this will be reacting to the price moves quite sharply. And if we consider this other line, this is based using the lagging indicator. This line is closing price with lag of 26 candle periods. So with that we get this moves. Now if we consider the current formation, here we have these two lines and there is a lagging line, so we get this current price plotted with a lag of 26 candle periods. So here you will have this kind of formation. All right, now coming to the use, these two lines can be used as the crossover structure. So we have this bearishness where the Tenkan-sen is below the Kijun-sen. That can also be considered to be indicative of bearishness in the underlying instrument. And so we can consider the sell trades whenever with these two lines in a bearish formation, and if we have these two lines in the bullish formation where the Tenkan-sen is above the Kijun-sen, in that case we can continue to look for the bullish trades, the buy trades. So there are multiple ways to utilize this indicator, and all you have to do is figure out the customization options using which then you can use this indicator in ways it suits you. So for that you have to go to the editing option, and there we have multiple ways in which we can customize this indicator to make it suitable for our trading strategy. So let us see what are the editing options here. So we can vary the candle period. So this is the default setup where the Tenkan-sen is being calculated for 9 candle period, and the Kijun is 26. Senko is 52. Suppose if you want to make it higher, so if you feel like that this is not good enough, the volatility is too much, and you want to figure out the setup for longer time period, then you can shift it. Suppose we want to alter this combination to 26, and then here 52, and third line say 75. So this is how it will look now. This is going to be a lot more smoother as we have the formation drawn on the larger time frame, but this is also going to have more lag compared to what we had in the first instance, as we will be relying on calculation period to be large, so it will have appropriate lag. If we have sharp moves immediately in the near vicinity, then that will get reflected in these average prices, but only in course of time. Only the lower candle period formation will respond to it immediately, and it will try to move close to the actual price action. But if we consider these larger time frame moving averages, then those will be responding a lot slower, so it will have this lag if we use the larger time frame, but the consistency is going to be a lot more compared to what we are going to get when we use the lower candle period formation for calculating these lines. So there is a trade-off between consistency and the responsiveness. If there is too much volatility, then you don't really want the lower time frame to give you too many false signals, but at the same time, if your time frame is larger, then there is the trade-off of lower responsiveness. So it is going to take time. So you have to decide which is the best possible way to take this trade-off in account, and then devise a way to take the system in a way which will minimize these drawdowns, minimize these drawbacks of the system, and still help you figure out the possible trading opportunities with good reliability, with higher probability of making money. Now let me restore it back to what it was, the default setup 9, 26, and 52. All right. Now coming to the coloring option, we have all these lines drawn on the chart which make chart looks quite colorful. And if you want to make it more stylish, or you want to make some lines more prominent and other lines less prominent, you can do that as well. So here we have this transparency option provided to us. So if you say that you want to rely more on Tenkan-sen and Kijun-sen line, then all you have to do is increase the width of both these lines to make them more prominent on the chart, and you can make it a bit stylish as well. So I'm now brightening it bit and changing it style quotient. All right, then if it is looking too prominent, you can reduce its transparency. We can make certain line disappear also if you feel like. Suppose if you want to eliminate these closing price with the lag, then you can do that. So here we have this modified version now plotted for us. So these two lines have become more prominent and a bit stylish as well, as we have done this customization. All right. So you can give more weightage to certain lines and you can give less weightage to certain price data drawn using certain lines. So you can do that as well. So it is always up to you which way to customize the indicator. The indicator is there to serve you. So all you have to do is play around and figure out a combination which is going to give you a best possible entry point and the exit point as well. Now coming to the advanced editing options, if you want all these values to stay constant for the whole of the candle period, then you have to opt for this recalculate on new candle only. So the calculation will be done when the new candle is plotted, then it will remain constant for whole of the candle period. That's how this system works. All right. The time period under calculation to be highlighted, so you can do that now. Here you will see bit of highlight as the chart is drawn on the black background. The highlighting is not visible that much, but it is there. Okay, now again let me consider what more can be done. Calculation from custom data. Instrument can be anything used from the chart. So as and when I change the chart to one instrument to another, it will change, but this indicator will be plotted regardless. But if we opt for on the Euro USD, then if I change the chart to other instrument, no charting will be done for this Ichimoku indicator. The candle period can also be similarly defined. If I want the chart to be drawn only on say hourly and not other time frames, then I can define this candle period to be hourly, and on other candle periods no plotting will be done. So that's how this system works. On shorter periods, displays value at custom period end, the custom period start, the custom period middle, or each candle. So for example, the charting is being done for the 15 minutes, but this indicator has been plotted for the hourly time frame. Then we have these options to us on which values, on which candle period these values to be changed. So that's how we have to define this. The spread side can be ask or bid, or it can be used from the chart. So these two options are there. If we want the indicator to be available on all the candle periods, then we have to opt for this. Else, if we don't really want this indicator to be drawn on all the candle periods, then we have to opt out and then specify on which candle periods it should be visible, and only on those candle periods it will be visible. So that's how this system works. All right. So that's it from my side for today's session, guys. If you have any query or any idea to share, you can write back to me in the feedback section, and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. This newly released platform provides you a wonderful trading experience. So link for this platform has also been included in the bio. Do check it out. Thank you all for joining in. I will be back tomorrow with a new indicator, new explanation, new setup. Till then, stay tuned. Have a fabulous time ahead. Make a lot of money. See you tomorrow. Goodbye.